Brent Freeman with the CBB Group. In today's video, we're going to discuss acquisition financing for small businesses. In particular, we're going to cover the Small Business Administration's 7A loan. We'll talk about what is a 7A loan, the features and benefits, qualifying the business that you may have targeted for acquisition, the application process and timing regarding that process, as well as costs, and then lastly, how to select an SBA lender, because like a lot of things in life, they're not all created equal. So if you're a buyer looking to finance an acquisition, stick around. You might enjoy this video. What is an SBA 7A loan? The SBA 7A loan program is a partially backed government guarantee. This means that the government agrees to pay a portion of the loan amount in case of a borrower default. This means that the lender has additional security, which in turn translates into a better interest rate and better terms for small business owners. The SBA 7A loan program is fairly flexible. The loan program has a max loan amount of $5 million with a minimum down payment of 10% or greater. Loan terms are up to 10 years, and the program offers both a variable rate and a fixed rate term. As in addition to, the program has no prepayment penalties. So overall is a very flexible, low rate, interest rate type of program for borrowers. The loan program calls for a 10% equity infusion or down payment from the borrower. This can come from cash, retirement plans such as an IRA or a 401k, as well as a gift from family members in some cases. The borrower must have a minimum credit score of 680, and your liquid assets must be less than the loan request. For instance, if you're asking for or requesting a $500,000 loan from SBA and you have liquid assets, either an IRA or cash in the bank of say $700,000, you would not be eligible in that the SBA deems you don't have a need for financing. You must be one of good character. Now the good character portion of this is really making sure that you've got a good record of managing your personal and day-to-day business affairs. You must not be delinquent or have been delinquent on any government loans or obligation, and you must demonstrate the ability to operate the business that you're purchasing. Now this really comes down to what we call on your resume, a skill set that's transferable from your current industry that you're working in and or past experience directly to the business that you're purchasing. So again, 10% down, credit score of 680, a good character, not been delinquent on any government-backed loans or obligations, and you must be able to demonstrate that you have the ability to actually operate the business that you're purchasing. So let's talk about the business actually qualifying for an SBA loan. The business must be in operation for at least 2 years, preferably 3, be considered a small business as defined by SBA, and this is one that sometimes is a little tricky. For instance, SBA has a list of ineligible business types that are that they will not lend on. An example of that is in Oregon. Like a lot of other states, marijuana is available for growing and distribution and sale, and it's legal, but SBA guidelines, because it's a federal program, will not lend on any businesses that are associated either with directly growing, selling, and or vendors that's primary business is to supply to those types of businesses. So if you've got a question, look it up on the SBA website and or talk to a business broker that's got a good reputation in the industry. The business must also be located and operating in the U.S. Again, we talked about it being eligible for SBA, and the business itself has not caused the U.S. government to incur a loss. So again, if the business has delinquent taxes or in their dealing with the U.S. government has caused them a loss, that business would not be eligible for SBA financing. So a buyer's need list for application. So there are really 3 forms that SBA requires. In addition, the lender may require some additional forms from you. But the first one is a borrower information form, and that's SBA Form 1919. In addition, they'll want a background and financial statements, and those 2 forms are 912 and 413. And you can obtain those forms by going to the SBA Small Business Administration website, downloading those forms, or talk to your SBA lender because they'll have a full package for you to fill out. You'll also need your resume, and make sure, as we talked about in the prior section, you'll need to demonstrate on your resume that you have a transferable skill set that can operate that business that you're trying to purchase. And then lastly, you'll need a letter of intent, and in that letter of intent it should outline the price, terms, and the assets that are included in the business that you're purchasing. Let's review some of the items that you'll need from the business to make the loan application. The first one is financials, and that really is the last 3, sometimes 4 years worth of tax returns and internal profit and loss and balance sheets to match those years selected. Depending upon what time of year it is, if it's past the first quarter, you'll probably need a year-to-date profit and loss balance sheet. And then this next item, which is a projected 1-year income statement with a marketing plan. Usually a seller that's retained a good business broker will be able to help you with this one. They should have, in their confidential offering memorandum, put together a detailed review of the prior year's financial, and you can use that to model on a go-forward basis the budget, as well as in the offering memorandum. They should have some marketing and growth opportunities for you to take a look at and might be able to use those on a go-forward basis. They'll also require a business overview. And again, in that offering memorandum, if it's well done, you should be able to take a lot of that information for that application, as well as the history of the company. Copy of a lease. Now, this next one's can be a little tricky in that the lease terms for the new business owner must match the SBA loan terms. So if you're getting a 10-year loan, the lease terms must match that 10-year loan. Now, it doesn't have to be a straight line 10-year lease. You could do a 4-year lease with 3 2-year options, and that would total 10 years and then match that requirement. And then lastly, business licenses. So if there are business licenses that are required to operate the business, you need to get a copy of those. And obviously, as you go through loan underwriting and closing, those business licenses will need to be renewed in your name. So there's just a brief overview of the items that you'll need to obtain from the seller and or the business broker to make loan application. So now you've gathered all of your loan information from yourself personally as well as from the business. So let's talk about how long it takes for the standard SBA loan process from start to finish to go. On average, it's about 60 days. Now, we've worked with some lenders that can do it within 45 days. Some lenders, transaction I just closed, was almost 90 days in duration. So a little bit of patience is required in going through this process, as well as making sure you cross all your T's and dot your I's on the initial loan application. But let's go through the process. First, gathering all those documents, filling out the bank forms, and then submitting that application. Once you do that, it's reviewed, usually by an assistant underwriter or in some cases the loan officer, and they'll issue after the review a qualification letter. Now this will outline the terms of the loan, the fees associated with the loan, and they'll want you to sign that qualification letter or commitment letter, as well as at that point putting your loan processing funds to the bank. From there, it goes into loan processing. You'll probably get additional requests for information either from you or from the target company that you're looking to purchase, and it'll go into underwriting. Once that goes through underwriting, you'll get a loan approval, and that loan approval will have conditions. The conditions will need to be collected and submitted to the underwriter prior to closing. In addition, you'll also have the bank will order a business appraisal. The business appraisal takes anywhere from a week to 2 weeks to get, and the business appraiser will probably need access to the loan broker and the business broker and the seller to talk about additional items or questions that they may have with the financials, line items, customer concentration, things of those nature. During this period of time from loan approval until loan closing, one of the things you'll need to start working on is the purchase and sale agreement and the property lease. Now, the purchase and sale agreement, once it's negotiated, along with the lease renewal, will need to be submitted to the lender for their review and approval. Now, they're not looking for items such as rate and terms. They're looking for items that are SBA guidelines. So the purchase and sale agreement, it will be reviewed sometimes by an outside legal counsel that the bank hires, or if they're a large enough bank, for instance Wells Fargo or US Bank, they may review it internally. Once those are done and everybody's signed off on the purchase and sale agreement, the lease, all the loan conditions, escrow is set up, and at that point the escrow will have certain items that we'll need to gather and deposit there. Once the escrow is set up and all of its conditions are satisfied, then the bank will put out loan documents, and hopefully it'll be a nice, smooth, easy closing. But you can see from just the process that we've talked about how easy it is to eat up 60 days. And if you have any hiccups in either underwriting or agreeing to a purchase and sell agreement, you can see how it easily could move past that 60-day mark. So costs. That's always a big one when you're looking at purchasing a business. There's your down payment, there's closing costs, but let's talk about the bank costs. The SBA has a loan guarantee fee, depending on the size of the loan or loan amount, that equals 2% to up to 3.5% of the loan. Now that's usually financed on top of the loan amount, so you're not going to have to come to closing with that 2.5% to 3%. There is a lender packaging fee. Those usually range from between $2,500 and $3,500. There's a business valuation fee, Again, that's probably somewhere between $3,000 and $4,000. There's a bank legal review, and again, in the prior segment, we talked about that purchase and sale agreement and lease. They'll use that bank legal review to review those documents, and that can run anywhere from $3,000 to $5,000. The residential appraisal. So one of the things that the bank's going to require is collateral over and above the assets of the business. If you have a house and it has the decent amount of equity, the bank will put a second lien on it for the loan amount that's owed under the SBA guidelines. And they'll want an appraisal to actually determine that value and the equity in your real estate. From there, we're looking at title and recording fees. So when they close, they'll want escrow to put a lien on the property, as well as issue title insurance, and then closing fee, and that's usually around $1,200 on average for a business between 1.5 and say $2 million. So the fees can add up, but they are not charged to you other than the packaging fee and maybe the business valuation fee until you actually close. SBA loan guidelines. Now there's a few of them that the buyer and seller should be aware of with regards to negotiating a transaction. And the first one comes with regards to a seller note. If a seller is taking back a portion of the transaction in a note, the note term must equal or be the same as the loan term of the SBA loan. So that's number one. Number two, in some instances, and this is where we see it between a seller and an employee that may be purchasing a company, where the seller is giving in the term of a note the down payment for the transaction, that note must be on full standby, meaning they cannot take a payment until the SBA loan is been fully paid. So we don't see it often, but it is one of those things that you can use. The other thing that you need to be aware of with regards to SBA guidelines is that the seller must exit the business within 12 months. Usually as part of a transaction, we see a seller staying on to train through transition anywhere from 4, 6, and maybe 8 weeks as part of the sales transaction. If they stay on any longer, it's usually done as a consulting fee, but the seller must exit the business within 12 months from the date of purchase. So in this next section, we're going to talk about SBA lenders. Are they created equally? And the answer to that is no. So when you're starting to think about looking for a lender as part of a business transaction, the first place to go is to talk to your CPA or your attorney if you've got one that has dealt with SBA lenders, or talk to the business broker that may be representing the transactions. Odds are they know and work with 4 or 5 different lenders on an ongoing basis, and depending on the uniqueness of your transaction, they should be able to help you find a lender that will be easy to work with. Now, one of the things you need to understand is the SBA puts out SBA guidelines. The lenders can overlay additional credit criteria on top of those guidelines. So this is where knowing the lenders, a broker should be able to help you place that loan, but a lender may have different, from lender to lender, different criteria and different credit appetites for various loans. So again, talk to your business broker. The other thing you want to do is make sure that the lender is a preferred lender, which this means is they've been given the ability by SBA to underwrite their own loan transactions. If the lender that you're talking to is not a preferred lender, that means that whenever they underwrite the transaction, they're then going to have to send it to SBA for additional underwriting, which will take anywhere from 2 to 6 weeks extra in that time frame. The other thing that you'll want to take a look at if you've not gotten a recommendation from a broker or a trusted advisor is if a lender is advertising that they do SBA 7A loans, are they actual business transactions or are they real estate transactions? If they're real estate transactions and they don't have a dedicated staff to handle their business acquisitions, I probably find another lender. And then again, we talked about this a little bit earlier, but credit appetite. Not all lenders have the same credit appetite. We deal with probably 5 or 6 different lenders, and we've seen some of them come in and go out of the markets based on the credit appetite of the particular bank. So again, working with a trusted advisor, an attorney, CPA, or a business broker, they should be able to help you select a lender to work with when purchasing a business. So remember, not all banks are created equal. These are just a few of the banks that we've dealt with in the last 5 to 10 years that have done a fairly good job in business acquisitions. They include Live Oak Bank, US, Umpqua Bank, Wells Fargo, and United Midwest Savings Bank. So if you've got any questions on any of these, we're more than happy to provide contact information for you. Just give either Bill or I a call and we can get that to you in an email. So there you have it. Everything that you wanted to know about a 7A loan. What is it? The features and benefits, how to qualify the business that you may be purchasing, the application and loan process, along with the cost, and more importantly, how to select the lender that might work for you. So if you've got additional questions, please drop Bill or I an email. We'd be more than happy to respond, set up a time where we can spend 10-15 minutes and talk about the lending process. So as always, I hope you enjoyed this video, you got something out of it, and we'll see you on the next one.